Well, good evening, all. Ira Epstein, and here we are. And we are with your financial market wrap-up. And this wrap-up is for the evening of July 23rd, Tuesday, 2024. We're just after 6:10 p.m. Central Time. Notice how the stock market is down behind me. And why is that? Well, it's earnings season. And the market didn't like Tesla. It's not like a few of the others. There's been some good ones, but it started off to me in a very negative tone when I saw the UPS numbers come out this morning because they carry so much of the nation's goods, and their stock got hit down 12% by the end of the day. So I think there's a bit of a bearish tone there. Obviously, we are caught in the time frame, and I think you realize it, of Vice President Harris making her moves. Today, she was in Wisconsin, giving her first campaign speech. She's vetting a number of people. I'm glad to hear that Pritzker, our governor, is not being vetted from what I've heard. And the woman from Michigan, the governor there, she has decided she didn't want to take it on either. We will see what the other candidates do or don't do and where she ends up going with this. But this is her time. So it will be Democrats' time from here. Right, believe it or not, you'll get a pause for a few days, but then the convention begins. You got I think it's the August 7th virtual voting. Apparently, Ms. Harris has raised over $100 million in basically a day and a half. That's a very impressive number. You will see all the backers of her coming out, and then she's got to prove what is she about. And very quickly, which I was hoping to see, President Trump said, yes, he's willing to debate 2 debates with her. And that puts it up, and that could get very, very exciting, all right? So we will see what she's made of when she goes against him. The question is it under the same rules as Harris? As President Biden, I got the names confused. As President Biden for Ms. Harris, I don't know. We'll find out where it's at. It was supposed to be on ABC, but now that he's willing to do 2, we'll see what it is. Of course, he said he'd prefer, and I'm talking ex-President Trump, saying he'd prefer not to be ABC as their fake news. Okay, whatever. All right. You're up a bit tonight in the energy markets. Remember, we had the API today at 3:30, and now we're going to get first thing in the morning, the EIA numbers. We're down just a fraction tonight in bonds and notes, but they gained most of the day. Weather patterns have changed a bit with cocoa, coffee, sugar. They've been under some selling pressure in the marketplace. The dollar was up slightly, but it's been a very mixed bag in most of the currencies as they're trying to figure out what this all means. And at the end of the month, we get the Bank of Japan, and anything can happen. I personally think what they're going to do is increase dramatically and reduce the amount of bonds that they're buying on the world markets. That's what I mean by increase. They'll increase and reduce the amount of what they buy, reducing it sharply, and then do an interest rate hike. But they can surprise us. When you look at the S&P, it's a rough one right now, but it is up nearly 0.4 of a point, just over that. When we take a look, though, at the daily chart, this doesn't look all that bullish. What you're getting suddenly are lower highs, lower lows. To break this pattern, what you have to do is take out now the highs of yesterday without taking out 55.42. That could give you a big reversal back to the upside. Barring that, there's more room to the downside on this chart. Where do you think the battle's taking place? Look at that 18-day average of closes. I call it the line in the sand, and that's the neutral zone in the market. So it's fighting there, looking for its next direction. If we can get further break, one of the numbers I'd look for is the Bollinger Band at 55.10. If you take out 56.29.70, then you open the door up for the 5700 area. Momentum is pointing down, and the market is, with tonight's break, getting itself into oversold territory. So I don't expect to see new shorts getting aggressive in an oversold market. See what goes on. What about the NASDAQ? Same pattern. Lower highs, lower lows. Could be coming here, and look at how oversold you are. In the Dow, a correction in a market that's been overall bullish. So what we saw is the rotation into the Dow 30, but the bigger rotation into the Russell. In this, you still have higher lows, but suddenly lower highs. So you've gone into a pause. You could easily fall back if you take out right here, the 40,467 level. You could get down to that 18-day average and fight a battle there for direction. And look at the Russell. Looks different than everything, which is healthy for the stock market as a whole. Once you get rotations going on, it's not counting on those Mag 7 stocks. So this is big. It is not screaming at me, jump in and buy it here. It is overbought. It had its move over a 5-day period, and now it's consolidating that move. When we take it the 10-year note, you've got a pattern of a higher high and a lower low. It's not giving me a setup right here, but let's assume it drops. I would assume it's going to fight a battle against the red line, the 18-day average of closes. In the dollar index, the first goal of this market, I think, should be to get up to the green line, 104.32, which is the 100-day average. It had a bearish embedded reading it lost. You often go to the closest main moving average, and it might even want to get up there into the 104.50 area to make a decision what to do. I think the ball is out as to whether traders think, which way do we go? Now, a sweep of Congress with the presidency probably does the market harm. Whoever wins the presidency, if they can't sweep Congress, I think it's the best situation you could get because you got one part balancing the other, and the president can't sweep right things through. And I think we did throw a wrench, and that's what's happening here. Biden dropping out has caused the dollar to rally. So I think that's what you pay attention to. In the euro, you're down to key support now, the 18-day average, and approaching very quickly the 100. So for 2 days, you did battle it out at the 200-day average on the way down, and you've sunk back into the next levels of support without a trend. This is a correction in a market that still in the pound has bullish bias as you're over the 18-week average. You lost the bullish embedded reading. When that was lost, I said, often what the market does before it goes to that high, it makes a run to get wherever the 18-day averages. Have not changed my opinion. In Bitcoin, today was an interesting day. Ether traded on 9 different ETFs on CBOE, the New York Stock Exchange, and the NASDAQ. In value, it did about $1.1 billion. It sounds like big numbers, and it is. But Bitcoin's first day did $4.4 billion in value. So it wasn't quite what it is, or $5.4 billion. It was a big number for Bitcoin. So this is a smaller vehicle, and it didn't really offer a lot of carry through for Bitcoin. It's still in an uptrend, in a resistance zone between the 100-day average and the upper Bollinger Band. In crude, you keep falling into support. So one of the things I think is happening is the 200-day average is often an important average. You go back, you can see. Look at how it fought a battle here. Can you slide through it? Absolutely. There's no magic, but it's a 200-day average, which is almost one business year. So it's come back here, and I think it's looking to see, can it find any support? The same happening in WTI. I think you have aggressive short covering taking place. I didn't say new shorts. Short covering taking place. Same in the gasoline market. It's exactly what I teach in my charting courses. And in that gas, as I said, you lost the bearish embedded reading. So before you go under this number, I can make an argument that we try a run up back into the 230 level, wherever the 18-day average comes in at that point in time. Now, one of the patterns that shows itself up for this type of trade that we're in right now happens to be that of outside days. Outside days often occur. Not every week, but certainly every month in markets, all the time. You look at them, you'll be surprised how many you see. Are they a continuation pattern? Most of the time. Can they be a pattern that ends a trend? They can be, but most of the time, continuation. How do you know? Well, I put 9 chapters together in videos for you to look at. I cover stocks, futures, and ETFs in the examples. And then as part of this, you get a 14-day trial to my complete futures research. That is both for the Spider and the futures for the qualifying users, a free trial to the Ira charts or our QT charting software, either one that will work with that. Again, for the qualifying users, I'm assuming you haven't used it in a while because we can get you free quotes and so on from the exchange if you haven't. Otherwise, it doesn't quite work. You'll be getting delayed quotes with it, and I'd like you to see the real action as it goes through. So how do you get all this? Well, it's pretty simple. You go to our website at iraepstein.com, and under the word courses, I call it education, but we renamed it because it's really where all my courses are. So you go to courses, it's iraepstein.com, courses, you'll see it right there in the center of the page. If you have questions, you can call my staff, and you can also move your cursor to the top here. It'll take you right to this course. I'm Ira. You have yourself a great day.